Good morning. Today is Monday, September 22nd, 2014. This is Dan McElwee, CFP, bringing you Ventura Wealth Management's weekly newsletter, The Profit Margin. We begin with our statistic of the week. No surprises here, airline travel is getting more expensive. The average round-trip domestic flight now costs $509, a $14 increase from the previous year. Over the past 5 years, airfares have risen 11% after taking inflation into account. Looking across the world, we turn to our global perspective. Industrial growth in China slowed to a 6-year low in August, spurring the central bank to provide the nation's 5 largest banks 500 billion yuan, or $81 billion of easy money, hoping in turn that their lending will increase. Looking at our chart of the week, we see that leading economic indicators rose in August, despite only 3 of 10 sub-indexes advancing. This bodes well for the U.S. economy in the months ahead. Our weekly commentary suggests that last week's headlines made for interesting reading, but market action was generally subdued. Alibaba, the Chinese internet retailer, had its IPO to great pomp and circumstance, which was widely considered a success, despite fairly large price swings. On the more serious and less exuberant side, the Federal Reserve held a 2-day meeting and announced that it would continue to keep interest rates low for a considerable period of time. Fed watchers have been expecting that this phrase will be removed well in advance of any hikes in interest rates. The overall cheery mood pushed the DJIA and S&P 500 to record highs, climbing 1.76 and 1.27% respectively during the week. The economic reports released last week were a mixed bag, while leading economic indicators, the Empire State Survey, and initial jobless claims all moved in the right direction. Disappointing figures were reported in industrial production, housing starts, and the Philly Fed Survey. We would argue that the preponderance of evidence still suggests a strengthening U.S. economy, while the S&P and Dow climb, more aggressive equities, represented by the Russell 2000 and NASDAQ, have either flagged or faltered. Still wary of 2008, and in the midst of what may be the least loved bull market of our time, investors to continue to play their hand close to their vest, favoring blue chips and other high-quality positions. In the week ahead, we look to market-moving events. Monday, we have existing home sales. Tuesday, the PMI Manufacturing Index. Wednesday, new home sales. Jobless claims and durable goods orders will be reported on Thursday. And Friday, we have GDP and consumer sentiment. Thank you, and have a great week.